Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to take a look at the week ahead analysis. We're going to go through some of the news this week as well as some key charts to watch. So going on to the news this week, we've got quite a bit of interesting data coming out. We've got in the US, we've got some CPI data as well as some core PPI and some prelim consumer sentiment at the end of the week. But it's going to be interesting to see where the CPI takes us this week. Forecasts are suggesting that we're going to see a rise from 0.1% to 0.4%. But that could be a bigger number considering the jump that we've had in the recent jobs data, where we saw jobs rise to 253,000 being created through April. So it's going to be an interesting week in terms of dollar fundamentals, especially because towards the end of last week in the US banking sector, US regional banks started to see some of their shares plummet, which kind of brings into question the health of the US banking system at the moment. And that could put a little pressure on the risk currencies. We could see a little bit of risk off coming into the market going into this week, because investors will be interested to see if the Fed are going to try and maybe push or consider further rate hikes. In the UK, we have a Bank of England official bank rate decision. We're seeing them hike interest rates from 4.25% to 4.5%. That is highly likely due to the high inflation rate in the UK at the moment, which is currently still above 10%. So the Bank of England have been open to say that they are interested in hiking rates further, and it will be interesting to see if the Bank of England Governor Bailey continues that rhetoric or whether he changes and starts talking about trying to pause rates in the next meeting like we've seen with other central banks. However, because inflation's so high, I don't see the Bank of England stopping those rate hikes just yet. I'm going to skip the currency strength meter this week. I'm away from home this week, so I'm not around my usual setup, so I haven't got that information right in front of me. So unfortunately, we're going to have to skip the strength meter, but it will be back in next week's video. Now, we're going to talk about the dollar index. We talked about this in the multiple live streams that we hosted last week, and we did an NFP live event where the dollar strengthened and could have been heading up to the 102 handle, the 102.25s. However, we started to see that pressure kind of come back into the US dollar towards the end of the session on Friday, and the dollar index has closed back towards this 101 handle, which we've been kind of talking about as the key level to watch. It's been tested so many times lately that if price was to break through that area there, then we could see a move down to the 99 handle. If we do somehow reject that area, maybe price false breaks through, tries to entice a little bit of selling below the 101, and we close back above, that's the only situation I see price potentially coming back up into the 102s at this current moment in time. Going on to cable then, so we were talking about cable in this range at the 1 spot 24.50 handle, range highs that is, and the range lows at the 1 spot 18.50. And we talked about price consolidating at this level, and we actually said from a fundamental perspective, price could break out and continue to the next level of resistance, which is the 1 spot 26.50, due to the fact that the Bank of England are going to continue to hike interest rates. And that's what we've seen. Price broke through the range highs there and continued up to that level. Now, if we're still going to have that kind of divergence between the Bank of England and the US central bank, obviously the US Federal Reserve are still hiking interest rates, but not potentially as aggressive as the Bank of England will have to because of where the inflation rate is at the moment, then we could see a move up to the 1 spot 3 handle on cable. But what we'll have to do is wait to see how price reacts at this current resistance level before seeing if that move has potential. Going on to dollar yen, so obviously the US banking sector crisis at the moment could play into the hands of the Japanese yen. If we do start to see some strength in this market here, then price could come down into some key levels of support. Now, we did reject the resistance highs here at the 137 handle last week. If somehow price gets back above that level in terms of yen weakness, then yes, it opens the door for a move up to the 142. However, maybe that's not on the cards this week. Maybe if price comes and rejects the 137 again, it could offer opportunities to traders to sell on that risk sentiment towards the 133 spot 50 and even lower towards the 130 spot 50 handle. Finally then, on gold could be an interesting market to watch going into this week, especially due to all that sentiment we've just discussed. In our live event, we talked about the rejection of the 2075 handle and the potential for price to come down into the 1950 level. We also have some lows just through there, around about the 1990 levels, which also could act as support. But the price of gold could be one to watch going into this month. It could pull back into this 1950 area, and again, if we do start to see that risk play come back into the market and the dollar, for instance, starts to break lower, then gold prices could head higher and even break above this 2075 handle. I'm gonna leave it there. I hope you enjoyed all the content in this video. I hope you enjoyed all the content last week. If you did, leave this video a thumbs up, subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.